thank you, everyone. And it was a pleasure listening to all the co-speakers. And especially, I could feel the pain on Shivam sir's face for all the bona fide purchasers under GST regime. And actually, the government is not realizing the ramifications of all the amendments they are proposing, because there would be a situation where a purchaser having 100 rupees credit, he is only eligible for 10 rupees credit, and 90 rupees credit is restricted in one or the other manner. So rather than dealing with the already existing bad provisions, they are making it worse for under GST for the taxpayers. So yeah, that I think that pain we are all feeling right now for the GST taxpayers. Coming to the topic for me today is the customs amendments. So before going on the specific exemptions one-on-one, I would basically firstly summarize in 3 points that where the this customs budget from last 2 years is heading towards. So the government's intention behind all the amendments they are proposing. So first one you will see in all the amendments is that they are realigning the customs tariff. So if you see presently, from past many years, they have not touched the customs tariff. The rates are there as it is, and whenever they propose to increase any customs duty rate or decrease any customs duty rate, they always bring in through notifications, or they propose amendments in the existing exemption notifications. So what happens is that if you have to find the effective BCD rate or other additional duties rate, so your search doesn't end at customs tariff, but it only starts at customs tariff. So you go to the customs tariff, and then you end up scrolling through multiple notifications, trade notices, circulars, etc., to actually get the final BCD rate. That's why the entire customs tariff or these rate notifications are so scattered right now. So if you see with from last 2 years, what they are doing is they are realigning and they are merging everything into the customs tariff. So now everything will be accustomed into the customs tariff, and all the additional and extra notifications will be done away with. Apart from realignment of customs tariff, second, their objective is to basically, if you see, they are shifting from all the manual and physical mechanism to the online, automated, and risk-based and trust-based mechanism. So like GST, where we have mostly automated everything. So now in customs also, government is trying to automate everything, and they want to move to the trust-based and control-based regime. So they'll only be all the bill of entries and the imports, they'll only be starting. So, so there is someone commenting, please start the slides. I'll come to the slides. I'm just giving the background, the three core intentions behind the amendments. So yeah, the first is realignment of tariff. The second is moving to the online and automated system. And third one is, of course, all their amendments are furthering the objective of Atmanirbhar Bharat. So they are boosting the domestic manufacturing. We were talking on the amendment in section 14, which is on the valuation. So basically, it has been proposed that additional obligations will be imposed on the importer in case of certain class of goods where they have reasons to believe that there is an undervaluation of goods. So what will be the class of goods and what will be the additional obligations? This is not clear, but yes, they are definitely dealing with undervaluation cases, and they'll impose extra certifications, approvals, etc., and obligations on the importer. Second is a very important amendment in respect of proper officers. So everyone must be aware that there was a Canon India Supreme Court judgment wherein it was held that DRI is not a proper officer to issue SCNs in respect of the customs matters. So there was a lot of SCNs being issued. So this Directorate of Revenue Intelligence, they used to investigate the matters, and they directly adjudicated the cases by issuing SCNs. So Canon India observed the lacuna in law and the missing provisions, and they said that DRI cannot issue SCNs. Only the jurisdiction officer who is assessing the bill of entry can issue the SCNs. Now, after this Supreme Court Canon India judgment, it was highly expected that a retrospective amendment would be there to make all these actions of DRI valid, because this was a infirmity or anomaly in law that was not per se intended. So rightly in this budget, they have amended the law, and they have provided that this Canon India judgment, basically they have overruled and they have said that all the actions taken by the DRI, despite the Supreme Court judgment, would be validated from retrospective effect. So all the SCNs that have been issued by DRI have been validated retrospectively. For future, they have noted the Supreme Court's observation as well as the circular issued in this regard, the instructions, and they've said that only DRI can investigate and give their observations to the jurisdictional officer, and only jurisdictional officer can issue the SCN. So going forward, the mechanism is what has been held in Canon India, but for past, they have validated all the actions taken by the DRI. Now, what will happen after this is whatsoever positive judgments or favorable decisions have been taken by the taxpayers basis Canon India judgment, they can be challenged before the courts, and department can go for the challenging those by filing appeal. In fact, the Canon India Supreme Court judgment also department has filed the review petition and it's pending now. So this is a big amendment, I would say, in the budget, and this will surely be affecting a lot of taxpayers. Third change in the customs law is advanced ruling mechanism. So we all know that advanced ruling once obtained is valid invariably unless there is a change in the law or the fact pattern. Now in customs, they have imposed a limitation of 3 years. So once an advanced ruling is obtained, it will only be valid for 3 years. And post that, you will have to reapply for the advanced ruling, even if there is no change in the law or the fact. So the validity, so how this will impact taxpayers is that they are not, once they've got the favorable advanced ruling, they are not free and they can invariably use that advanced ruling. But after 3 years, they have to apply it again. And of course, the authority's view could be changed by then. So they have to change the position. At the same time, where the advanced rulings have, negative advanced rulings have been received, for those taxpayers, it's positive that they can change the position after 3 years.
Yeah.
Now, these new customs import of goods at concessional rate of duty rules have been introduced. These are IGCR rules. So the entire intent behind these rules is that wherever the importers are obtaining concessional rates of duty, or they want to take the benefit of the concessional rates, so they'll have to follow these IGCR rules. What is the difference from present system to future system is, right now everything is physical and manual, and you have to take the approvals physically. Now they're moving to end-to-end online process. Everything will be automated. You will have to give a prior intimation before the import is made and obtain an INN. That is a unique number that you get. You have to furnish that unique number and continuity wound, and basis that you can import the goods at concessional rate. So you can furnish the INN and make the imports, and these have been made effective from March 1, 2022, and a circular has been already issued for the transition, how to deal with the transitional cases as well, as to where the stock is already lying in the warehouses. So how to shift that to IGCR rules then from the physical codes. Now, what is missing in the customs law changes is that they have not renewed the FTP, and which is pending from long now. So that has still not been talked in the budget. Now, coming to the customs rate changes, if as I've discussed in the starting of the slides, budget 2021 as well as budget 2022, the entire amendments have been furthering the main objective, that is realignment of tariff. So in budget 2021, they told that 400 customs exemption entries would be reviewed, and all the old entries which are irrelevant now will be removed, and rest will be merged to the customs tariff. Similarly, BCD rates were reduced for agricultural products, and AIDC was imposed for a particular period. And then from 1st January 2022, 350 entries of customs tariff have been amended to align it with the World Customs Organization. Then there have been increase in BCD of several machines to promote domestic manufacturing, one of the other objectives. Then from 1st May 2022, there is realignment when most of the exemption entries would be removed and it will be merged with the customs tariff. And lastly, BCD on several imports will be increased to boost the domestic manufacturing. So starting with the first exemptions that have been done away with is, or probably gradually they'll be done away with. So project imports, as we know that presently, if a project is being set up in India, so there is an option that you can register the project and you can import all the capital goods for that project under the project import scheme. And under a single HSN, there are certain concessional rates that are available for all the capital goods that are being imported for that project. So the concessions range between 0 to 5%. Now they've realized that these capital goods import exemptions are not needed, as the domestic manufacturers can themselves manufacture the capital goods. So to further that objective, they are increasing the rates and they are basically doing away with the concession on project imports. So how it will work gradually is that projects that are registered till September 22 and imports are made within 1 year from that date, that is September 23, existing concessions would continue and there would not be any increase. Projects that are registered till 2022, but imports are made after October, post September 23, that is from October 23, then concessions will be removed and 7.5% rate would be applicable on the imports. And similarly, projects registered after September 22, again, excess rate of 7.5% will be applicable. So basically, projects registered till September 22 and imports made till 23 will only be available for the concessional rates. Now, this a very important amendment, which is not part of the budget, but basically a clarificatory circular that came on the same day of the budget, was on the SWS exemption. So the background behind this clarification is that earlier there have been judgments on SRD nutrients or Bajaj Auto, wherein in respect of excise duty and education cess and secondary higher education cess, the Supreme Courts have held that where basic duty is exempt, that there is a deemed flowing of exemption for education cess and secondary higher education cess as well, because they are calculated as a percentage of basic duty. So if basic duty is exempt, then obviously the cesses would be exempt. So these were the judgments in excise duty. Then there was a unicorn judgment which held these two judgments to be per inquirium and said that they have not considered the available jurisprudence in this regard in Modi Rubber's case. And they said that unless there is a specific exemption for the cesses, a natural exemption would not be there because of the exemption of the basic duty, and there needs to, in the absence of any specific exemption, cesses would continue to levy. So basis this unicorn judgment, then there was certain Madras High Court judgment in the case of Gemini and a circular in January 2020 which said that SWS will not be automatically exempted where BCD is exempt. Now after this circular, the customs authorities started collecting SWS. And in fact, in case of where the basic customs duty is exempt by way of debiting from scrips, MEIS scrips or SEIS scrips. So in that case also, the circular instructed and directed CBIC to make the necessary amendments in ISK that this SWS is not debited from the scripts and should be paid in cash. So since 2020, January 2020, SWS is being paid in cash by all the importers where there is BCD exemption by way of utilization of scripts. Now this circular has rightly clarified, and note that it is clarificatory circular, so it is retrospective in nature. And this rightly clarifies that where BCD is exempt and SWS is calculated as percentage of BCD, so it's a natural corollary that SWS will always be exempt. So basis this circular, now what can happen is for all the taxpayers who have paid SWS in cash or debited through scripts in past or wherever they have other exemptions, AA, advance authorization, FT exemptions, and they've paid SWS because of the earlier judgments in circular, now they can claim refund. Refunds can be claimed either through amendment and bill of entry or by filing appeal against the bill of entry. So these two mechanisms can be followed and refund can be filed, and also the benefit of Supreme Court extension order in wake of COVID-19 from covering the period from 2020 to 2022, refunds can be filed for the past period as well. Now coming to specific customs tariff changes, as I discussed that most of the exemptions have been withdrawn. And some of the BCD rates have been increased. So if you see on the textile, leather and handloom industry, for most of the apparel and clothing accessories under specific headings, they have removed the specific rates and they've shifted to ad valorem rates. So with this, the effective rates will increase. So to balance it out, they have removed the corresponding exemption of SWS. In respect of leather, textile, and handloom industries, machineries used for these industries have been exempted. Exemption has been withdrawn from April 1, for some cases from April 1, 22, and from some cases for April 1, 2023. And in case of bona fide manufacturer exporters in the listed cases for very particular items, handicraft item, in case of handicraft items for decorative paper, photo frames, etc., for footwears, buttons, buckles, they have granted BCD exemption, and they've mentioned that it will be granted to bona fide manufacturer exporters. But nowhere in the budget they've explained who will be the bona fide, how it will be analyzed if someone is a bona fide manufacturer exporter. So to that extent, I think guidelines would be issued subsequently that how these exemptions will be available to the exporters. And as we discussed, that most of the exemption notification and custom tariff have been merged to this respect. Coming to the iron and steel industry, so as the iron and steel prices have been increasing a lot, so presently there is an exemption which has been extended. So scrap of iron or steel being imported, so there is an exemption which has been extended till April 1, 2023, and post that also a reduced rate has been proposed that it will attract 2.5% of BCD after April 1, 2023. So till 31st March 2023, it would be nil rate, and post that it will be 2.5%. And apart from that, anti-dumping duty has been removed if imports are being made of these items, straight line bars of steel, high speed steel or non-cobalt grad, etc., imported from these particular countries. So because of the increase in price of steels, the extra exemptions have been granted to the steel products, iron steel products. In case of drugs and pharmaceuticals, exemptions have been withdrawn for all the specified drugs, medicines, diagnostic kits to again boost the manufacturing in India. However, in respect of the rare diseases, for treatment of rare diseases where the domestic availability is not there for those medicines, the exemptions have been given for the import of those drugs and medicines. Coming to electronic gadgets, BCD on parts of smart watches, hearing devices, and smart meters to be increased in a phased manner. So right now they've not given what rates would be there, but they will increase the rates in the phased manner. And in case of camera lens for mobile phones, they have reduced the BCD rate on 2.5%. For solar panels, they are increasing the rate of PV cells, which is the main component and ingredient of setting up of solar panels. So they have increased the rate even if they are in assembled form or not assembled form, wherever they are imported. So for an unassembled one, there would be an increase to 25% of BCD, and for an assembled form, it would be 40%. So they are basically furthering the objective of domestic manufacturing of solar panels and not of imports. In EV sector, because now they are promoting the electronic vehicle sectors heavily, and there is not enough technology available in India. So there they are giving duty benefits wherever the EV kits are imported, either in CKD form, even if it's incomplete, but they have the essential character of the EV kit. So in CKD form, where some of the assembled or disassembled form, they are granting duty benefits for the EV sector. So as we discussed in the beginning that most of the exemptions will be withdrawn depending upon whether they are too old to be relevant, and wherever there was a condition for every exemption. So in that case, they have highlighted that in the budget speech also, they've highlighted that many of the exemptions were introduced with a purpose initially when they were introduced. Now that purpose has been achieved and there's no longer requirement of those amendments. So all the conditional exemptions will be withdrawn. So in budget 2021, section 25(4)(a) was amended, which said that every exemption notification will have an expiry date on March 31st after 2 years. And then in this budget, they have made the amendment that mega exemption notification, that is 50/17, that provides most of the exemptions will be for certain exemptions will be valid till March 31st, 2023, and certain will valid till March 31st, 2024. But importantly, what is left or open-ended is that for mega exemption notification, they have highlighted that okay, 2023 and 2024 would be the expiry date. But for all other conditional notifications, they have not given any clarification. So basis section 25(4)(a), will all those expire on March 31st, 2023 automatically, or where there would be any extension that government will be introducing? That is still an open-ended question. So importantly, not the full-fledged exemption notification, but only the conditional notifications are going to end in next 2 years. Yeah, Mr. Nanda. Now coming to my last topic, that is SEZ Act has been repealed. So it has been said that the new act will be applicable from September 2022. So the date is decided, but the new act has not been there as of now. Now, what are the basic requirements why this act has been repealed, and what are their expectations from the new act is? So, as again, they want to make it completely online, IT driven, trust based. Mr. Nanda, you can come to the next slide, the last slide. Yeah. So, in public domain, there in various discussions, these certain points have come out that what they are expecting from the new SEZ Act is that since like customs tariff, SEZ Act has also not been touched for 16 years, and it has become an old law now. So they want to realign it with the WTO guidelines as well as the present circumstances and conditions. So they want to revamp it completely. They want to shift to the risk-based regime, as presently all the SEZ compliances procedures are manually handled by the authorities and every paper is manually checked. So they want to move to the automated scheme, and they will also now move to the trust-based scheme where only selective consignments or selective entries would be, transactions would be checked, and not the entire process would be checked. And a paperless regime. So they'll do away with all the physical documentation, and they'll move to online forms. And they're also realigning it with the, so everything will now function from the customs portal only for SEZ administration also. And then they are also planning to introduce provisions to allow subcontracting by SEZ units. So right now, since a unit which is settled in the SEZ area, that has that benefit of all the exemptions, but if they want to get any process or any one of the work done from a DTA, so there are a lot of procedural and compliance related issues that they face. So subcontracting is almost impossible for them. So they want to ease that process as well. Then there is amendment in definition of services. So they are basically doing away with the uniform list. Right now 58 or 60 list of services are there in the list of services in SEZ laws that you can use for the authorized operation. So there's always a confusion whether any services can be related to the authorized operations, or the benefit in that respect would be available or not. So they are doing away with that list, and probably now all the services that SEZ unit will be using will be deemed to be for the authorized operations SEZ is set up for. They are also planning to include SEZ units under the road tax scheme. So presently road tax scheme is road tax benefits or scripts are not allowed to SEZ units. But going with what they are doing for other benefits as well, like right now, road tax benefit is not available if you're availing the benefit of advance authorization or any other benefit on imports. So going with that thing, in our view, even it should not be available to SEZ logically, because SEZs are taking all the imports duty free. So the procurements are duty free. So subsequent giving benefit of road tax scrip on exports as well would be a double benefit. So in our view, this should not be there, but this is one of the expectations of the industry. And last is they want to introduce the benefits that is available to the gift SCZ area. So basically, if you're aware that there is a gift city in Gandhinagar, Gujarat, wherein this gift zone is there. And apart from the normal SCZ benefit, there are additional infrastructure, smart city benefits. So there's highly advanced infrastructure and other benefits that are available to gift SCZ particularly. So they're planning to incorporate IT sector as well into that gift zone. Right now, there are insurance companies, banks, and capital consultancy companies, firms in that gift SEZ area. So they're planning to introduce IT SEZ as well in that gift zone. So yeah, that's it. And thank you so much, Mr. Nanda, for giving me the opportunity.
Thank you for a wonderful presentation.
Yeah.
Thank you.